Hello and welcome to Reality Check. Tonight, a recent headline about a big jump in outgoing foreign remittances from India suggests a paradox of the flow of wealth within the economic engine of the Modi government. The news report in the Indian Express pointed to a record-breaking rise in how much money Indians were remitting abroad, suggesting growing anxieties about confidence in the economy. While at the same time, recent data on foreign investment shows that FDI in India continues to steadily rise, suggesting foreign investor confidence. Now, this may not exactly be an apples to apples comparison, but it's worth probing, if only because it complicates the already fierce debate about what exactly is going on with the Indian economy. Let's break down the numbers, beginning with the FDI question. So, under UPA2, FDI inflows into India were about $190 billion. Under NDA2, that jumped by 50% to almost $284 billion. The average rate of growth of FDI under UPA2 was negative 1% in those 5 years, 2009 to 14. NDA2, it was actually 12%. And that is the FDI inflows. But when we turn to remittances, now this is under the government scheme that allows Indians to send out a maximum of $250,000 or approximately 1.8 crore rupees at current dollar value a year, the story changes dramatically. So under UPA2, Indians remitted out $5 billion in those 5 years. But under NDA2, that number has jumped almost 8 times to $39 billion, which is an increase of about 660%. So that's a huge jump. And if you just look at it as the past quarter, the latest quarter for which we have data under NDA2, which also straddles in a sense NDA3, it's the same amount as the 5 years of UPA2. So almost $6 billion went out between April and July of this year, which is actually more than the $5 billion that went out in the entire 5 years of UPA2. So just in 4 months, you had more money go out than in 5 years of UPA2. This is the overall flow chart. If you look at it, if you look at the remittances in a graph, so the blue is UPA2, and then you can see the huge jump of the remittances spiking under the second term of the Modi government. So where is all this money going? How is it getting spent? This is the breakup for the latest quarter. And it tells you that almost 40% is going for travel. These are all the heads under which money is allowed to be remitted out. About 24% is going for studies, maintenance of relatives, another 20% or so, gifts 10%, deposits and investments are only about 5%, and then all the rest are the others. But the special investigating team investigating black money told the Economic Times that they fear that some of these remittances are actually being used to avoid paying taxes in India. So is this a proxy for tax evasion, perhaps even black money being siphoned out? That's not very clear. Now, all of this is also coming at a time when we continue to get numbers and we continue to get information about the fact that there is an exodus of high net worth individuals from India, which appears to have increased in the recent years. It's according to data compiled by groups that study this. So between 2007 to 17, in those 10 years, the average number of high net worth individuals leaving India was about 3,800 a year. 2018, that's gone up to 5,000 a year. This is according to New World Wealth, a South African organization that tracks the global movement of high net worth individuals. So, some evidence to suggest that Indians, wealthy Indians, are remitting their money outside this country, that they're also leaving this country in greater number than before. But at the same time, foreign direct investment to India remains healthy, even though the economy is in trouble. All right, joining us tonight to try and decode this paradox, the wealth paradox at the heart of the Modi government, we have with us Dr. Brinda Jagirdar. She's economist and former chief economist at State Bank of India. Gurcharan Das, author, commentator, former CEO, Procter & Gamble. Professor Arun Kumar, economist, Nasir Salim, Managing Partner, Flexi Capital. Sanjay Jha, of course, we know him in his many avatars. He's, by the way, he's a former banker as well. But of course, Sanjay is the voice and face of the Congress party too. Nasir Salim, let me just start with you. If you can try and make sense of this paradox in 20 seconds.
Sure. Basu, I'll tell you clearly as far as, well, it's, I don't know if it's a paradox or not, but clearly as far as the way we see it is that, in the last quarter or so, we've seen a lot of spike of investments going out of the country.
Yes.
Predominantly because we saw dollar versus the INR at about 67 to 68 in the middle.
Yes.
And I thought it's a good hedge. We as bankers feel that it's a good hedge to get in money in international US dollar currencies because, if you have international studies, for example, for your children, or you have travel plans, you may want to remit funds overseas. That's the first point. Second point is, I think, Nasir, broadly, we see a lot of recessionary trends emerging globally.
Right.
And all of that,
Nasir,
so when this happens,
I just want to jump in to say
in safe havens and dollar.
I just wanted to jump in to say that this that the remittances,
the
outflow, both sets of data, FDI and remittances, we're talking over a 5-year window. So the remittances that are going out, this huge jump, almost 8 times, is over a 5-year period. So it's been steadily going up. That's the.
Sure. You see, Shri, it's a very simple thing as far as India is concerned, and that will continue to happen. No, I agree that obviously the exodus has been higher over the last few years, but that's also because the dollar has been actually appreciating against the INR, and as long as we know, and for the largest time, ultra HNIs prefer dollar assets being invested globally.
Right.
And that's one of the first reasons why we see a lot of money moving out.
Okay.
Specifically, I must tell you, India is a current account deficit economy and the US is a current account surplus economy.
Okay.
So globally, we'll always see an economy like that of India, where we are deficit on current account. You will see dollar always appreciating and therefore attracting more inflows as against some other currencies globally.
Okay. So you're looking at it more from the sort of the rate of currency at a kind of currency exchange prism. But Gurcharan Das, let me ask you, because when those numbers came out, one interpretation was that this is further evidence that there is a sense of unease about what is happening to the Indian economy, and that people, particularly wealthy Indians, are either moving themselves out or moving their money out.
Yeah, I think there are a number of things going on here, and certainly one of them is a flight of capital. People want predictability.
Right.
And the fact is that in the last 5 years, there has the trust deficit with this government has grown. One of the factors is the tax, for example, tax harassment in all this. But overall, what's happened is that people, the wealthy, feel that they are being demonized in India.
Right.
That is to say that it's an easy thing to do, go after the rich. I mean, Indira Gandhi did it all the time.
Right.
But after 91, that rhetoric did change. However, now what we may be paying partly the price for is the fact that this government, with all good intentions, wants black money laws, etc., to be implemented strongly.
Right.
Now, people have had a relaxed attitude about it. Now you can go to jail.
Right.
The fact is they're implementing. So we may be going through a transitional period.
Right.
And certainly, India has to be competitive with the rest of the world.
Right.
I mean, the new tax rates are not going to help in this. And Dubai is only 3 hours away.
Okay, so you're citing.
The reality is that a lot of people are moving.
Okay, so Gurcharan Das, you're citing.
And in India.
Okay, you're citing a number of reasons. I'll come back to you.
Create that trust.
Okay, Archana Jagidar, do you agree with some of the reasons Gurcharan Das is citing? He's saying number one is the fact that people are leaving, the wealthy are leaving because there is a lack of trust. There's a trust deficit. There's a feeling of being harassed. Tax rates are too high. Either they're leaving or their wealth is leaving.
Flight of capital.
Flight of capital,
No,
yes.
it's interesting that you call it a paradox because, as you rightly said, FDI, capital is going out as your data shows, and there's no disagreement on that. But interestingly, also FDI inflows are coming in, and India remains the highest receiver of remittances from workers around the world. So the remittances that are coming into the country also remain very high. So this certainly is a paradox. But as Mr. Gurcharan Das is saying,
explain that?
A lot of things, a lot of changes happening within the country. The one, of course, is private.
How do you explain
the private
that?
investment definitely is weak. So clearly that is showing up.
Right.
But
How do you explain the fact that FDI is going up?
Because there is this fight
But
against
people
black
are still
money.
putting their money outside. How does those two things add up?
Okay, FDI is now. Just a moment. FDI is something. It's long term. It's money here to stay. So unlike FPI, which can move out very easily. So FDI money coming in with the ease of doing business. Remember, India's ranking has jumped. It's gone up to 100.
Right.
So India's more than 100. So India's India's ranking is below 100. So its ranking has really improved. So this is so the global economy, the global investors are finding this an attractive place to invest, and somewhere their confidence remains. But when money flows out, that also shows that there is uncertainty. People are not very sure what's going to happen, and also because of the fight against black money, money laundering, and there's been a lot of talk for a long time that there's round tripping going on. So clearly, the government wants to put a stop to this.
Okay. Do you agree with that, Professor Arun Kumar, that one of the reasons that's being, and we hear this quite a lot, that the fact that the wealthy are either moving out or moving their money out is because of this government's crackdown on black money?
So, let's be clear, the LRS scheme is about legal flows of money outside. That's not black money going abroad. Black money, when it goes abroad, goes through flight of capital, through hawala, through various other channels like over-invoicing, under-invoicing, etc.
Correct.
LRS is a perfectly legal thing. So that's legal money moving out. We must distinguish between that. But what it also implies is that, the legal money is a proxy for how much of the illegal money may be going abroad. So if the legal money is going abroad more, then the illegal money would also be going abroad more.
Right.
I'm looking at the data from the Indian Express, and post demonetization, the outflows have increased dramatically, So in a sense, the uncertainty that's been created, the policy shocks that have been introduced by the government, I think those are important factors for why people are going abroad. And this is a risk-averse strategy. You don't want to take the risk of the kind of things that are going on in India.
Right.
I think, people would not have minded paying more taxes if the investment climate was better and the profitability was rising.
Yes.
But the profitability has been hit post demonetization.
Right.
Investment rate is not rising, and that's why people are moving their funds abroad.
Okay.
Now, when you move your funds abroad, you do that through a process of what's called layering. This layering process means you use the tax havens to move your funds abroad illegally, and that's hard to trace.
Right.
So in a sense, when the FDI is coming in, it's coming for certain definite opportunities, like in mergers and acquisitions. Like recently you had the Walmart, coming in, and that's a big investment.
Yes.
You may have other such
In
investments
Flipkart,
in the
yes.
IT sector, etc., which are for startups, etc. So those are where the opportunities are. But the Indians are moving out, especially the small and the medium scale. The LRS movement is small and medium scale movement outside,
Yes.
and that is because they face a lot of uncertainty post GST and post demonetization.
Okay, so you're
I
saying
think
that
they
how
are being risk averse and transferring funds abroad to minimize the risk in.
Okay, so you're saying that explains this seeming paradox. Sanjay Jha, now, of course, you would like to obviously pick up only on there's a negative headline here for the Modi government and a positive. You'd obviously like to pick up on the negative, but the fact is, Sanjay, that FDI inflows, the government's claims that FDI inflows are breaking past records and are much higher than FDI inflows in your time is true. So the Indian, perhaps the Indian small businessman or the Indian high net worth individual may be feeling anxious and uneasy, but foreign investors do not seem to have given up their confidence in the Modi government and the economy under the Modi government.
Vasu, let me today wear the banker's hat and not make a statement which has got any political prejudice in it. The first point is, and we need to really understand that a lot of the FDI that has come into India hasn't really resulted in what you call as productive investment. A lot of it, as I think Professor Arun Kumar rightly pointed out, has been in terms of increasing maybe equity shareholding, etc., which is basically more control and not really new. Therefore, you haven't seen a tangible impact in terms of your growth numbers. Point number two, let us accept it that India has a high degree of regulatory cholesterol even today. There are a lot of businesses that are relocating because, the ease of doing business has been gamed by this government. And that is a truth that, has a political slant to it. I can't deny it. But the fact is that India does suffer from the facility of creating new business. Now, I want to disabuse this notion that I think Gurcharan Das has planted on your discussion. This whole thing about the fear of being arrested for black money. Vasu, you know it better than me, perhaps, that demonetization was a money laundering scam. And Arun Shuri said it before we did. Okay. Point number two. What has happened on Panama Papers? What has happened on Paradise Papers?
Right.
These are manifestations of brazen tax havens that were used for routing black money.
Okay.
This government has taken zero action.
Okay.
So the truth is, it's got nothing to do with black money. But what you are seeing at the moment is, if you couple this with the withdrawal of roughly 4.5 billion by foreign portfolio investors, that India is no longer looking like an attractive investment destination.
Okay. Let me. You said you won't go political, but you went full political. But that's fine. I mean, that's not surprising.
It's a combination. We live in a political economy.
Okay, all right. Gurcharan Das wants to respond. Gurcharan Das, and then Gurcharan Das.
Well, first of all, I think Sanjay Jha may be a banker, but he doesn't understand the basics of economics.
Yeah.
The fact is that when foreign investment comes into India, FDI, whether it's through a merger acquisition route, it is capital.
Yes.
Capital creates jobs. And whether you do it through the thing, but when Walmart brings in $15 billion, it in fact saves Flipkart.
Right.
And it saves all those jobs and in fact increases the possibility for farmers to be able to enjoy a cold chain.
Sure.
And to be able to bring their goods into India.
Okay.
And so I think
Vasu, give me a chance to respond to the
glib statements are capital foreign direct investment is good investment.
Okay.
And don't try to sort of put some kind of political spin on it.
Okay, fair enough.
The other point, I think, okay.
Can I go to Nasir?
Point great. I'm sorry, I have to the great economist we just
time is short. Nasir Salim, you wanted to come in? Yes.
Yeah, no, Shini, I was just saying, I have three quick points here, Shini. Number one, I think as far as I heard some of the panelists saying that, could be a possible route of moving black money out of the country. But I must tell you, being a banker, I was with a very large multinational bank for 15 years. I can tell you there's a lot of EDD and a CDD that is conducted. RBI is pushing for a lot of regulatory checks and compliance checks. And under the LRS,
due diligence?
There's no way that you can move black money overseas.
Right.
There's no question.
EDD and CDD, you're talking of due diligence.
Yeah, because these are compliance checks in place. Number two.
Right.
My quick point is, Shrini.
Yes.
Yeah, I'm talking about enhanced due diligence and customer due diligence. Basically, my quick point number two on that is, Shrini, is that look, as far as currently where we stand, and I can try to give you some rationale on why over the last 6 months or so, or maybe even 9 months, more money is moved out overseas, is simply because today in the US we see an inverted yield curve, and in Europe we see negative yield curves. And whenever, which basically says that you're moving into a situation where you're looking at stress on balance sheets and of economies, and you may be looking at recessionary trends, Shrini. And therefore, globally, historically, we've always seen monies moving into two buckets.
Right.
One, gold, and you can verify this, by the way, because a lot of economies are pumping in gold at the moment.
Right.
And dollars, because dollar is a universal currency which supports a normal hedge against all other currencies.
Okay.
So that could also be another great reason why we see a lot of money flowing out. My third point is, as far as FDI is concerned, FDI has got no relationship with any of this.
Okay. Let me just go back, if I may, to Dr. Brinda Jagirdar. Dr. Brinda Jagirdar, whatever the reasons might be for this outward remittance, the fact is that if about $40 billion has gone out in the past 5 years, is that a matter of concern for the economy that there's been a flight of that much capital, especially at a time when the economy is contracting? Yeah.
Flight of capital is definitely a matter of concern because it affects investment and if it affects jobs. So certainly, but we also should see the quality of the capital. We don't want to be something like what happened in Latin America, with hot money flows created so much of havoc in the economy. We don't want that kind of a situation. That is why we see that SEBI is also tightening up. Now, P notes, for example, a lot of money flowed in through that route. So that is being tightened up. And this regulation, when it is tightened, and a lot of questions are being asked, where have you got the money from? And even the tax havens, the Mauritius route and all is being tightened up.
Yeah.
So all this is definitely causing unease. There is no doubt about it. And
but
SIT
this
has
is,
also said
but
that,
again, just to clarify though,
has also said that this is a route
but Dr.
for
Jagidar, just to
black
clarify,
money laundering.
No, but just to clarify, now you've had more
Yes.
than one panelist point out that the money that's going out under this liberalized remittance scheme is not black money. This is, this is through the white route. So
It's easy to say that. It's easy to say that. But then the SIT has also made a statement which you yourself just now put out. So
Yeah.
it's not very clear. And round tripping has been something which has been talked about a lot.
Okay.
So this is still a grey area, and everyone, of course, does their due diligence, and bankers would say they've done their due diligence.
Right.
So that's not what I'm arguing about, but I'm saying that there is absolute scope over here for round tripping and for money laundering.
okay, yes. So I just quickly, if I can just come to you, Professor Arun Kumar.
Much larger volume, Srini. It can't be done under the LRS program. I'm afraid not.
Okay. Professor Arun Kumar, now what do you think now is what kind of steps, I mean, I know this can become a huge discussion, but if you were to identify one way you think that the government could try to check this, outward flow of capital and wealth and wealthy individuals, what would that be?
So, as I said earlier, LRS is not black money going abroad.
Yes.
And one didn't say that FDI is not creating jobs.
Yes.
One didn't say that FDI is not good.
Yes.
That was not the point.
Of course.
The point was that why are Indians taking money abroad through legal and illegal means, and part of it is being round trip back into the country, into the stock market. So all that is okay, but if the government wishes to stop this, then the LRS scheme, which is a liberalized remittance scheme, that of course has to be checked as it was done earlier.
Right.
Why have $250,000 being allowed through the LRS route? But
Right.
that's not going to prevent capital flight from taking place.
Okay.
So if the government wants to do something, it must create trust in the economy, as Gurcharan Das said.
Right.
Investment climate has to improve.
Right.
The investment climate has been down because the demand has been down, the profitability has been down.
Right.
So if you improve the investment climate in the country, then money going abroad through
Okay.
flight of capital will also go down.
Okay.
So I think the government has to act on the whole in the investment climate in the
And improve the
country.
investment climate.
And there
Okay.
the taxation
Sanjay.
will also be one aspect of it.
Right.
But
Sanjay Jha.
yeah, but let me
Sure.
say our taxation are not very high compared to some of the advanced countries.
Okay. Sanjay Jha, you wanted to, yes, go ahead.
Yeah, Vasu, the truth is that money, whether it is rupee or dollars or pound sterling, it goes to whichever destination gives you the highest rate of return on capital. That is basic elementary economics.
Okay.
Now, if you're seeing at the moment that people are pushing their money abroad, the economic rationale can be diversification of assets.
Right.
And obviously they find maybe a price differential between the asset they buy here and the asset they buy abroad. So
Sure.
both these factors do come into play. But the larger factor cannot be ignored, which is that in India, if you were to get your economy going, you
Yes.
need domestic private capital investment. The
Right.
FDI as a larger proportion of our needs is minuscule. And moreover, whether you like it or not, I mean, there is a lot of repatriation of profits because you have to have capital account convertibility as well. Otherwise, they would never
Well-
put their money in.
well, the
so
thing
these are
is-
the realities. And I think the point that Gurcharan Das probably missed, it happens when you spent your whole life selling soaps, that end of day,
Ouch.
everything foreign is not necessarily good. You have to ultimately make sure that it adapts to what your local conditions are. I
Okay.
think foreigners have put money into India, but we haven't seen the
I wanna-
impact on jobs
I
or
want
the
to-
GDP growth rate.
Okay, okay. I know. I wish I could give Gurcharan Das a chance to respond, but I'm afraid I'm completely out of time. But we'll have both of you back.
Sure.
Gurcharan Das, we'll have both of you back, and then you can finish what you started here. But that's all the time we have. Thank you very much indeed for joining us. That's it on Reality Check. Thanks for watching. Good night.